Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are talking about an update on Giga Berlin's production rate from Tesla. We also have some news on S and X inventory discounts, some new reporting on Tesla brand loyalty, a new video of the Cybertruck, an update on FSD Beta, and more. Nice start to Investor Day week for Tesla stock today, finishing up almost 5.5% to $207.63, while the Nasdaq was up just 0.6% on the day. Elon chiming in a little bit on the stock over the weekend in reply to a tweet discussing Berkshire Hathaway's $128 billion in cash and what stocks they should buy with it. Elon simply said, starts with a T, ... Not the first time Elon has used that tweet format, but he reminisced about how Charlie Munger could have, in 2008, invested in Tesla at a $200 million valuation. Anyway, getting into probably the biggest news for today, Tesla on Twitter yesterday announcing that Giga Berlin produced 4,000 Model Ys in a single week. So very exciting to see that coming off a little bit of downtime there at Giga Berlin earlier in the quarter. At a steady state, this would of course extrapolate to around 50,000 a quarter or 200,000 per year, depending on downtime. Thankfully, Tesla has been pretty transparent about sharing when these milestones have been achieved from both Giga Berlin and Giga Texas. If we look at this milestone history for Giga Berlin, we can see that a 1,000 vehicle week was first achieved in June 2022. It then took 105 days, or about 3.5 months, to hit 2,000 vehicles in a week in early October 2022. And since then, the ramp has accelerated a little bit. So 78 days to hit 3,000 in a single week in December, so about 2.5 months rather than 3.5 months. And then 71 days to go from 3,000 now to hitting a 4,000 vehicle week. So those milestones are coming more quickly, which is really nice to see. We can put a couple of good fitting lines on this if you want to use one that's a little bit more S-curve in nature. That fits pretty well with the historical numbers that we've got. That would extrapolate to Tesla hitting about 10,000 per week towards the end of Q3. That might be a little bit aggressive if we look at just the last couple of milestones. Those do look a little bit more linear in terms of production rate progress. If that trend were to continue, that would suggest a little bit above 9,000 per week to end the year. Tesla has previously talked about wanting to hit 10,000 vehicles per week before the end of 2023. So with the rate of progress that we have seen so far, if that continues and the progress kind of falls in between those two extrapolations, then it seems like Tesla is actually tracking pretty well towards that. Now it's a lot of time left, a lot of things can change, but it definitely seems like a realistic target at this point in time. Now, obviously, at one point, Tesla was targeting 5,000 per week from Giga Berlin by the end of 2022. Didn't hit that, but probably most likely to occur sometime around April. So a few months behind, but not too bad. Hopefully we see a similar update on Giga Texas soon. In the fourth quarter, Tesla actually hit that 3,000 vehicle milestone out of Texas before Berlin. Since Tesla hasn't shared that yet for Texas, I would assume that they're not quite there yet, although they could just be saving that for Investor Day. And Texas is a little bit more intertwined with 4680 development, with Cybertruck development, things that won't necessarily impact the ramp, but may have some influence. So good to see that for Giga Berlin. It's also a good reminder that the China market is still important for Tesla. This reduces the export burden on Shanghai pretty significantly, especially when you consider that Berlin is only producing Model Y. I think people realize that, but hopefully are not fully realizing the cost benefits that are going to come along with this new factory ramping up as well. All right, next we've got an interesting update on the Model S and the Model X. As we have been talking about over the last couple of weeks, there have been a lot of rumors around Hardware 4 and the possible appearance of that pretty soon on these vehicles. As we wait for more information on that, Tesla has started to offer new inventory Model S and X vehicles at a pretty significant discount in the United States. In some cases, like the Model X shown here, that can be over a $15,000 discount. The odometer on this one has a little bit less than 500 miles, so these appear to be, in some cases, demo vehicles or test vehicles, which can and has at times in the past suggested that Tesla may be clearing out some of their in-store inventory for some newer vehicle to replace it. So if you're not a person that cares too much about FSD hardware, it's probably a really good time to get one of these discounted vehicles. I doubt they would be in line for any significant updates beyond FSD hardware, as we just had the refresh not too long ago. So it'll be interesting to keep an eye on that and see if those vehicles are moving, and hopefully we learn a little bit more about Hardware 4 this week. Next, we've got some new research from S&P Global. They have published their 27th Annual Automotive Loyalty Awards. This is based on buying behavior in the United States from January to December of 2022. We had recently discussed some other S&P loyalty information that was a little bit different though and didn't include the full year. In this new research though, Tesla doing quite well. Of the 8 slots they have for manufacturer and make loyalty awards, Tesla winning 5 of them. Tesla is a new winner this year on overall loyalty to make, ethnic market loyalty to make, which S&P says was because Tesla led with 52% of its loyal volume coming from ethnic consumers, And then most improved make loyalty. So despite everything going on in 2022, Tesla's loyalty increased more than any other make. The other two awards for Tesla here, highest conquest percentage and alternative powertrain loyalty to make, both repeats from last year. I think probably no surprise on either of those. Overall loyalty to manufacturer, General Motors was the winner there. It seems like Tesla must not be eligible for that because the make and manufacturer would be the same for Tesla, and if the highest overall loyalty to make isn't higher for any brands for GM, then there's no way that their overall loyalty to manufacturer can be higher than Tesla, which is the same manufacturer as the make. So that's pretty dumb, and unless I'm missing something there, Tesla should be winning that one as well. The other category, overall loyalty to dealer, seems like Tesla wouldn't be eligible for that one either, Subaru taking that. And then the remaining one, most improved alternative powertrain loyalty to make, Mercedes-Benz there. Obviously Tesla though winning that same award on an overall basis. So a pretty good performance, I would say. And then for segment-specific models, they've got the Model Y as the highest loyalty in the luxury small utility segment, and the Model 3 as the highest loyalty in the luxury small car segment. X and S, though, not on the list. Anyway, overall highest loyalty rate, overall highest conquest rate. It's a really nice position for Tesla to be in. Next up, we've got a new short video of the Tesla Cybertruck. This was shared by What's Inside on Twitter. And we get a pretty rare perspective here, one that we haven't seen since some drone videos a while back. Top down. And this does look like one of the newer prototypes. It does have the more angular side mirrors. It's far enough away that I don't think there's too much lens distortion going on. And I think it's really cool to see this out and driving around on the roads, and I think in this video it looks pretty good. I would have to guess that Cybertruck will be at Investor Day, so hopefully we'll get some more footage of the Cybertruck later this week. Next, we've got a couple of quick things on FSD Beta. Tesla has posted some information about the recall that we talked about a couple of weeks ago. It just goes through the information about the recall that we've already covered. The only thing really new here is that Tesla has said that until the software version containing the fix is available, we have paused the rollout of FSD Beta to all who have opted in, but have not yet received a software version containing FSD Beta. So not too surprising, a little bit disappointing for people in that scenario, but hopefully that'll be resolved pretty soon. Then the other part of this that got a lot of attention on Twitter for whatever reason, shouldn't have, but Tesla did say in one of the FAQ things here that FSD Beta is an SAE Level 2 driver support feature, and with FSD Beta, as with all SAE Level 2 driver support features, the driver is responsible for operation of the vehicle whenever the feature is engaged, etc. People are acting like this is somehow some new information or some disclosure by Tesla. This is what it's always been. This is nothing new. Bad actors try to turn this into some gotcha moment for Tesla, but hopefully anyone paying any amount of attention and acting in good faith understands that right now the system is level 2, that's super obvious, and that over time Tesla plans to continue to improve functionality. Whether that ever extends into level 3 plus, obviously up for debate, but what Tesla hopes to do is clear. There's nothing new here about their aspirations. All right, moving on from that, as we head towards Investor Day, I'll spare you all from another prediction episode. I think we've all talked plenty about this, but as we hopefully get more information on Generation 3, Pierre Ferragu of New Street Research has published some of his research on how Tesla may be able to cut costs of goods sold on their next generation vehicle by about 40%. Pierre says that they have done this from tearing down a number of different vehicles, analyzing the cost structure, and based on their analysis, they think Tesla could build a smaller vehicle for just under $22,000. If Tesla sold that vehicle for $27,000, that could be produced at a 20% gross margin. And that's before accounting for additional margin that could be driven by FSD subscription, FSD purchased as an option, let alone anything robotaxi related. So pretty exciting prospects there. Plus, let's not gloss over the savings from EVs, which can easily reduce the cost of ownership $5,000, $10,000 over a gas car equivalent. So you're really talking about a car that compares in cost with a $20,000 ICE vehicle. That sort of a path might be exactly what Tesla is outlining at Investor Day. Next, we've got a quick update as we seem to perpetually have on the prospects of Tesla in Mexico. Reuters today reporting that the president of Mexico was planning to hold a call today with Elon Musk. It had previously been reported that they were planning to speak, so I guess this is the culmination of that prior report. And as usual with this story, maybe we'll hear a little bit more about it at Investor Day. All right, last few things here. We've got an update today from BMW. CNBC reporting that BMW on Monday launched a pilot fleet of hydrogen vehicles, with CEO Oliver Zipse referring to hydrogen vehicles as, quote, the missing piece in the jigsaw when it comes to emission-free mobility, end quote. Hard to think of a better contrast as we head into Investor Day and we hear what Tesla has to say about the missing pieces for emission-free mobility. Guessing hydrogen, not that missing piece for Tesla. But interesting comments from BMW CEO and, of course, who was BMW's partner on this, these fuel cell vehicles, well, they're getting the fuel cells from Toyota. Can't go wrong with that combo. Next, we've got an update from Tesla Solar. They announced today that Tesla Solar and Powerwall are now available in Milwaukee, Wisconsin. So happy to see that, of course, right after I moved, but that's all right. I was in an apartment anyway, so wouldn't have worked out for me, but glad to see that, and I appreciated a number of people tagging me in that today. Glad other people are excited about Milwaukee as well. Finally then, looking ahead to the rest of the week, as I mentioned at the end of last week, a little bit unclear on what the schedule is going to look like exactly for this week with Investor Day. I am traveling tomorrow, so kind of going to play things by ear. If we do have things worth discussing, I'll probably do a live stream in the evening. If it's a slower news day, maybe not. Again, we're all just kind of waiting for Investor Day at this point. And after that, it is kind of up in the air based on what we learn. So we'll see. It's going to be an exciting week. And then in general, the next couple of weeks, I'm going to be a little bit back to being in flux, doing some traveling, some moving. So it'll be busy, but I'll do my best to keep the schedule as consistent as I can. All right, that'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and maybe we'll see you tomorrow for the Tuesday, February 28th episode of Tesla Daily. Thank you.